people always say, why is accounting called accounting? And the answer is because we deal with accounts. That makes perfect sense, doesn't it? We deal with accounts, and we tend to break our accounts into a few types, and these are the accounts. So the first are called assets. This tells you that an asset is a resource owned by a business, which to me means not a whole lot, right? What does that even mean? Anybody have a more plain English definition of asset, the term asset, what you would think it means? That doesn't work anyway. What's an asset? Nobody? Yeah? Okay. Yeah, so things that have value that the business can actually own. Okay, you have to be careful because people will always say like human resources, employees are assets. They're not. You don't own people. Okay, you can, in one sense of the word, say they're assets. They bring value to the business, but they're not actually an asset from an accounting standpoint, something that the business owns. Most common assets would be buildings, land, cash is an asset. Right? If you have cash in your bank, that's things that has value and that you own and that you can use to run the business. One of the weird ones we'll learn about is something called accounts receivable. That's when your customers owe money to you. That's an asset because it gives you a claim to money from a customer. So assets are things that you own. And then liabilities are things that you owe. So debts, if I owe money to someone else, that's called a liability. That's the accounting term for it. There's more than one type of liability. We'll learn a lot more about the different types, but generally they either come up from me directly borrowing money from you, that's a liability, or in a business arrangement, a lot of times they come up when someone says, hey, here's the goods I promised you, and delivers goods to us and then tells us, hey, you can pay me in 30 days, right? So that's still a form of borrowing, but we didn't borrow cash. We just, it happens all the time. Suppliers deliver stuff and say, pay us within the next 30 days. But also things like when our employees work for us. If you do work for me and I haven't yet paid you, I owe you. So there's a liability, okay? So that's what a liability is. Assets are what we own and liabilities are what we owe. And then there's these weird ones. The rights of the owners of the company is called equity. And you're like, I don't know what that means. What it means is if a business has assets, it owns stuff, and it has liabilities, it owes stuff. Then if we subtract the debt it owes to people from what it actually owns, what's left over is what's called the equity. And this is the part that belongs to the owners. So if you think about it, if I own a house, I think I own it, and the house was $200,000, but I have a debt to the bank for $50,000 of that $200,000, that I don't really own the whole $200,000 worth of house. I only own $150,000. The bank owns the other $50,000. So we would say my asset is worth $200,000. My liability is $50,000. The difference between the two is my equity, or the amount that actually belongs to me, the $150,000. And so that brings up this equation, which is assets plus liabilities equal equity. This is they call the fundamental accounting equation. It's sort of the basic equation that we'll use throughout the rest of the course. So what a business owns plus what it owes equals the equity, okay? Or if we rewrote it like this, we'd be like, well, let's just go through some examples and it'll make more sense. Actually, I just wrote this totally wrong. I've been doing this for 20 years. I tell you my brain's gone. Assets equal liabilities plus equity. It's fundamental to what I do, and I just did it wrong. So that doesn't make me feel real strong today. Assets equal liabilities plus equity. Please write it down correctly or you'll be confused the rest of the semester. I could have just gone to the next slide, right? There it is. Sometimes you'll see it written as stockholders equity. That's because in a corporation, the owners are called stockholders, okay? In a small business that's not a corporation, they usually will just say owner's equity or something like that.